Good morning. Welcome to this week's market update. A holiday-shortened week didn't prevent the S&P 500 and NASDAQ from touching fresh record highs. The S&P 500 added 1.7% on the week, while the NASDAQ added 1.6%. The Dow led the way, advancing 2.3%. Markets started the week uneasy over a dismal ADP private payrolls report. However, Thursday morning saw the release of June's non-farm jobs report from the Bureau of Labor Statistics. This report blew expectations out of the water. The U.S. economy added 147,000 jobs last month, significantly higher than the projected 110,000. The unemployment rate also unexpectedly dropped to 4.1%, while economists had anticipated it would increase to 4.3%. Additionally, May's report was upwardly revised to show 144,000 jobs added. The stellar jobs report was great news for U.S. equity markets, but yields also jumped on the report. These figures demonstrate that the U.S. economy may not be slowing quite as much as initially expected, but likely throws cold water on hopes for any rate cuts in the near term. CME Group now only gives a 4.7% chance of an interest rate reduction at the Fed's next meeting, and probabilities for multiple cuts by the end of 2025 have also dropped. Despite a bumpy ride, President Trump's new tax and spending bill made its way through the House and Senate and was officially signed into law on the 4th of July. The bill extends 2017's tax cuts while giving additional breaks for tips, overtime pay, and Social Security recipients. Much of these breaks are to be generated via cuts to Medicaid and a reduction in tax credits related to clean energy. Supporters of the bill argue the new legislation will enable the U.S. economy to continue a rapid pace of growth, while detractors are primarily concerned about the Medicaid cuts and likely increase to the U.S. deficit. This week will mark the end of Trump's 90-day pause on most reciprocal tariffs. Last night, Commerce Secretary Lutnick mentioned that these tariffs would now go into effect August 1st if there's no progress in signing a deal. We don't expect markets to react wildly unless the administration brings back the more aggressive rhetoric exhibited in the spring. We are also keeping an eye on fresh small business and consumer credit data set to be released this week. Thanks for tuning in. Have a great week.